I'm very happy to have on the Goldstein on Gelt show Charles Sizemore, who is a CFA and is the founder and principal of Sizemore Capital Management, which is a registered investment advisor. Charles, start by telling us what the CFA stands for after your name.
Sure, Chartered Financial Analyst, and what that stands for is 3 years of very rigorous testing.
Right. It's been my experience that people who are CFAs are very, very attuned to the financial markets, much more than your kind of average Wall Street guy. In fact, Charles, that's how I came to you. You'd written an article a while back about real estate investment trusts around the world, and you started focusing on REITs, R-E-I-T, real estate investment trusts in the Far East. Do you think that's a good place to be? Not a recommendation, but let's just talk about in terms of, is that a good place for people to be looking to get real estate exposure?
Well, I certainly think it can be, and price is the most important factor there. Is it undervalued? Is it overvalued? And you can't escape that. But right now, I do think REITs in the Far East are pretty attractive, and that's for a couple reasons here. One, all of the scare over Fed tapering has caused anything around the world associated with income to drop in price. Two, Asia in particular has been hit over the last year just due to fears that China is slowing down. So you take those two together, and I think you do have some pretty nice opportunities over there.
So what if China does, in fact, continue to slow down?
Well, they are. I mean, that is continuing. Those days where China was going to enjoy 10% plus growth a year, those days are probably over forever. If they slump down into 6-7% growth, that's still pretty good. Most of us would be happy to have 6 to 7% growth every year. It's a high quality problem when that's a slowdown for you. But I do think a lot of that is already priced in, and the key also is it's not just the value, it's the income as well. So if you're a little bit early or you buy these at a price that's not quite ideal, close but not quite there, if you're getting a good stream of income along the way, that really can paper over a lot of mistakes.
When we're talking about people buying REITs in the Far East, are there currency issues that they have to be concerned about?
Oh, always. Whenever you buy anything outside of your home country, there's always currency issues. Now, the countries that I like the most, Hong Kong and Singapore, tend to have stable currencies. They fluctuate, and if you have a financial crisis like we did in 1997, 1998, those currencies can take a pounding. Even as we saw in 2008, 2009, currencies anywhere in the world can take a pounding or can if people run to them as a safe haven, they can shoot up. So currency instability is always a factor. It's just something you have to keep. It's just one more thing to keep in mind when you buy.
Mm-hmm. Well, we often tell people that it's another form of diversification. My day job is that I'm a financial advisor. I sit in Jerusalem and I work with people on their financial plans and their investment portfolios, and we handle the accounts through U.S. brokerage firms, but in doing that, you can have investments all over the world. And I always tell people it's a two-edged sword to have a currency exposure. Either it's going to help you or it's going to hurt you, but at least it's diversifying some of the risk away, which is, in fact, even how the REITs themselves are often considered a real alternative style investment, yeah?
I would agree completely. Tell
me about the liquidity of the REITs. Can they be bought and sold all the time? The ones you're talking about in Hong Kong and Singapore and the like.
Well, you have to be careful. A lot of these will trade in the U.S. markets as ADRs. Now, for anyone who doesn't know what an ADR is, it's a non-U.S. security that trades in the U.S. Sometimes sponsored by a bank, sometimes not. They can take different flavors. But the issue with a lot of these Far Eastern REITs trading in the U.S. is that there's just no liquidity. So if you're thinking, well, it's easier if I buy the ADRs instead of going to the foreign market, you can potentially get yourself into a real mess there. If some of these trade a couple hundred shares a day, you don't want to touch that. That's asking for trouble. Now, if you buy them in their home markets, a lot of these have daily turnover of a couple million shares, or at least several 100,000. So I think the liquidity is generally pretty good in their local markets, and if you have a broker that can trade in those markets, that's no problem. The ADRs I'm a little bit wary of, but in any event, before you buy, you should check the volume of anything, because some are clearly more liquid than others.
On the liquidity front, one of the things that I find in Israel is that people often do like real estate, but they like buying individual apartments. In fact, there's sort of a tradition here Why do you think it is, and tell me, is it like this in other countries as well, that people really like buying an apartment and owning, becoming a landlord and renting it out, which is also
Sure.
not very liquid, by the way.
No, it's not liquid. It's a case of instead of diversifying, it's sort of putting all your eggs in one basket and then watching that basket very closely. And there's nothing wrong with that, of course. But as to your question of why do Israelis favor real property? Why do they favor apartments? I've noticed that in a lot of the world. And my wife is from Peru, and so I spend a lot of time in South America. I've noticed among wealthy and upper middle class people there, people that have investable funds, they have a strong preference for property over shares. They view the stock market as kind of being a form of gambling, and that they see property as being a real tangible asset. I think a lot of this goes to a long history of inflation. South America has had an awful time with inflation over its history, and so people look for something that holds its value. I know Israel had some pretty significant inflation issues back in the 70s and 80s, and I think that has an impact on people's psyche.
So what happens now when you're in a low inflation environment? In fact, the Israeli economy is considered one of the best economies in the world now. Inflation is very under control. We didn't have the same housing crisis that everyone had. Does it still make sense if there's low inflation to buy apartments?
Well, it makes sense to have apartments as part of your overall allocation. Now, back to the Israeli economy as a whole, Israel is pretty amazing right now. It's a technology hub. There's a lot of exciting things happening there, so you don't want to limit yourself to only investing in property. You want to be a part of that market as well. You want to look for opportunities there. But I think that owning an apartment or a portfolio of apartments can certainly be part of your overall portfolio, particularly if they pay good rents and you're covering your mortgage and it's a good stream of income for you. I see no reason not to have that be part of the mix.
All right. We are talking with Charles Sizemore, who is the head of Sizemore Capital Management based in Dallas, Texas. He's a registered investment advisor. We've been talking about REITs and some of the reasons that people look at international REITs. Let's say that you're a real believer in real estate and you like owning property. You believe, like Mark Twain said, you should buy real estate because they're not making it anymore. The earth is only so big. Do you think it's better to buy it in the form of individual properties, or is it better to buy REITs?
Well, for the average investor, the average, not super high net worth, but upper middle class to, let's say an entry level accredited investor, somebody that has about $1 million in investable funds, you can buy a couple of individual apartments or a couple houses. That's achievable with your level of wealth. You're probably not going to be able to buy an office tower or an entire apartment building. So the reason to go for REITs as opposed to, or some sort of similar vehicle, is you get an entire portfolio of large properties that you would not normally be able to buy on your own.
So, okay, I think that's one very good point. Also, when you own a REIT, it's totally liquid. To buy and sell it, as long as it trades, with enough liquidity on the stock market, you're paying a commission to your broker, and that's it. You don't need lawyers, and you don't, no problems. You also don't have tenants you have to deal with. It's true the REIT itself takes a management fee, but otherwise you'd have to do it. It seems to me, though, it's like a best of both worlds approach. You get the asset you want to own without having all of the trouble.
Sure. You get professional management. Now you pay for the professional management, and there's nothing wrong with that. And what really it comes down to, though, is what is your opportunity cost? Like if you see an apartment that's just being sold for a fire sale price, you have to do the math. If I buy this, is this a better deal than I can get somewhere else? I mean, each individual deal has its own merits, but as a general rule, I would say, the buying a portfolio of REITs is a great way to get a diversified basket of real estate.
Okay. All right, that sounds like good wisdom. We're nearing the end of our time, but I want to touch on something that I know you've written about and spoken about, which is the England versus the United States. The reason this, of course, comes up on my show is I sort of sit in the middle. In Israel, we have a lot of immigrants from the United States as well as from England. And a lot of them try to diversify, interestingly, in both countries when they're sitting here in Israel, although we don't always see that when they are back in their home countries. What sort of similarities do you see, or maybe major differences between the two countries and the opportunities there?
Sure. Well, the similarities are obvious. You're looking at common law countries that share a language and share a culture, and that's great. But the individual markets are actually pretty different. The UK is completely dominated by London. It's not to say that the rest of the country doesn't matter, but London, and particularly financial services, are just a very, very big part of that economy. And financial services have a disproportionately large, they're a disproportionately large part of the stock market. The U.S. is just a much larger, more liquid market. Now, because the U.S. is a larger market there, a lot of companies here focus primarily on the domestic consumer, whereas in the UK, and this is true of a lot of continental Europe as well. This is true of France. This is true of Spain. The companies, because they operate in small countries, they tend to have a more global perspective. They tend to have a much larger global footprint. So when you invest in the UK and continental Europe, a lot of times you're getting better exposure to emerging markets. For example, you're getting backdoor exposure to emerging markets. So that's a plus on that side. The US, though, it tends to be more tech savvy. The UK has some great tech companies. ARM Holdings, for example, they're cutting edge. But for the most part, the US is a much bigger and deeper technology center than anywhere in Europe.
All right, so now since we're on Europe, just touch on the last question, which is thoughts on Germany and the future of the euro.
Well, I do think the euro has a future, which if, that kind of puts me in the minority. There's a lot of people out there that think the euro is going to go into the dustbin of history there. My view on it is this. Europe has had such a chaotic past over the last 100 years. Their entire political establishment is committed to European integration. Every major political party of the left and the right are both committed to making the euro, or making the European Union work, and of course the euro is a big part of that. It's not going to be pretty. That it hasn't been pretty for the last couple of years, and I don't expect it to be pretty going forward. There's going to be some ugly altercations. There's going to be some ugly choices that have to be made. But my view is it will muddle through. There's just too many people have too much riding on it, and the cost of breaking it up is too big. It's cheaper for a country, Germany right now, the way things are right now, Germany is pretty well bankrolling most of the rest of the EU.
Right.
Their taxpayers aren't real happy about that, but their politicians are not stupid. They know that Germany does benefit from having a united Europe. They benefit from having an open market. Germany's a big trading big trading country, I should say. They have huge exports to their European partners and all over the world. They're not going to do something that jeopardizes that. They may make some superficial, they may do some things superficially to make it look like they're getting tough on Greece, for example. They may kind of use Greece as a whipping boy, but they're not going to do something that dissolves the union. They're not going to risk that. They have too much at stake.
All right, so we'll mark that down on the Goldstein on Gelt website and put the interview up, and we'll check it out in a year or two and see how you did. Charles Sizemore, thank you very, very much for your time in the last few seconds. Tell me, how can people follow your work? Sure,
you bet. Go to charlessizemore.com. I have a free e-letter. If you want to check me out, go there and feel free to give me a call.
All right, we'll put a link on the show notes at goldsteinongelt.com. Charles, thanks again for your time.
You bet.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.